Hello, and welcome to the Crypto Beat. My name is Kelvin Sparks. This is my co host, Tim Copeland, head of growth at The Block. And joining us today, we have Larry Cermak, president of The Block, and Adam James, editor in chief at The Block. Welcome to the show, guys. How's it going?
Doing well, thanks.
Pretty good, pretty good.
Nice. And now we're going on today's episode about this year's biggest moments in crypto. So, Tim, I will say you put a large part in getting this one together. So the first one you had was Trump goes big on crypto. Would you like to start us off?
Sure. I mean, yeah, this wasn't a surprise this year, considering sort of what happened, the end of last year and sort of his endorse for crypto. I think some people maybe had questions about how they went around it. Like the meme coins took everyone by surprise. The Melania seemed to take even more by surprise, sort of came out of nowhere. And then, yeah, the World Liberty Finance, it was a bit of an odd project for the sort of, Trump's to get completely involved with. It's not clear what it was standing for. It was like an instance of Aave on Scroll or something. I remember like reading from the documents when I was covering it back then. And then it sort of was also like real estate and everything else. And they issued a stable coin. Now they're doing like an American Bitcoin mining operation. They're doing a lot. They have their fingers in a lot of pies. And I do think there is potential that it causes some sort of backlash. For instance, we saw, I think it was the New York Times wrote this big story about the SEC dropping all of its cases against crypto firms, and they sort of used the argument that the Trump crypto projects were tied to a lot of the firms that had their cases dropped. It doesn't look good. Like, even if it's completely separate, whatever, the fact that World Liberty has done these sort of deals where they, like, you buy our tokens, we'll buy your tokens. It gives fodder for mainstream media to sort of write negative articles about it like that. So, yeah, I mean, it's sort of, I guess, a blessing and a curse. I think the sort of involvement. I think they could have supported legislation, which they're doing, without necessarily doing a bunch of projects that are slightly more dubious than we wish they were.
Yeah, maybe I can add on to that as well. I think one thing, obviously, with the Melania meme coin, that was not great for the markets. That was something that completely top-ticked the entire sort of altcoin market at the time. Since then, we've been basically down only. And the reason I think, well, also with the Trump meme, obviously top-ticked it as well when the Melania meme was launched. And I think it just goes to show that Trump's administration has been a little bit chaotic and a little bit unpredictable. And because of that, it led to a lot of these uncertainties in the market, which then didn't translate well into the rest of the market. Another thing that, Tim, you kind of touched on, but there was a lot of sort of rumors about World Liberty taking some amount of payment in exchange for buying tokens. So there were a bunch of projects that wanted World Liberty to buy them and hold them on the balance sheet, which would then create a headline and which would then hopefully help with the project. We've seen a bunch of that. I don't think there was a lot of proof, but we've seen a bunch of that happening as well. And then also you touched on the stablecoin. Another thing to mention is that I think CZ at the moment holds like 60% of it or something in terms of the issued stablecoins. It's a huge amount of it, and it hasn't seen success outside of really very few users. And it's speculated that CZ is only holding that as part of some sort of a backdoor agreement, so they can generate interest off of it. So, to summarize, I think like a lot of the things that Trump's have done when it comes to crypto have not been great for the industry. I agree with you that it probably led to like regulations clearing up and like them pushing on that direction. But if Trump or if Republicans don't win the election in 3 years, I think we're in trouble. Because I think what they're doing is going to be very bad if Democrats end up winning. And I think it's going to bite all of us in the ass big time.
Yeah, like piggybacking off of that, to your point, Larry, like if the pendulum swings the other way in a few years, like I think it's bad because if you sort of like just zoom out big picture, right, and you are sort of like class of 2017 or earlier, right? If you would have like asked somebody in 2017 like what the ultimate sort of top signal for like crypto is, it would be like the president of the United States like launching their own meme coin, which didn't even exist back then. Like meme coins weren't even a thing. So like I do think like if you just step back and try to look at it rationally, it is like sort of a top signal. I'm not saying it's like the ultimate top signal for all of crypto's history, but again, to your point, like if the Republicans lose the election next go around and the pendulum swings back, I think there can be a major, major backlash against everything that has been pro crypto from the Trump administration.
I tend to agree. And I guess one question I'm curious about for the group overall is as we think about where like the Trump supporters who ended up being like pro crypto as well are currently. It seems like they're in a weird spot, or at least the Trump administration isn't going to try to placate or appease crypto holders like right now, given how much they've done to at least improve regulation. So where do you think that leaves us going into midterms? Crypto as a topic. It seems like nobody really cares, especially given where prices and I don't know headlines just aren't moving the news at all right now. Uh, Yeah, sorry. Maybe just random tirade on my part. But moving on, I guess we go to the Bybit hack. So in February, Bybit was hacked for looks like roughly 1.2 billion dollars at the time, and they managed to survive. So Tim, I know you were keen on talking about this on the Crypto Beat previously. Would you like to start off this topic as well?
Yeah, I mean, it was quite interesting because we had Ben Zhao on the podcast a few weeks ago, and I asked him, about it. And I thought what was fascinating was he explained how, like, all of his advisors, his lawyers, everyone was like, do not go live and talk about this. And that can be quite common, when there's sort of situation and you like, everyone's just like, we don't know what's going on, and the company's just quiet. And I think that's often, I think, the advice given. And he just went, I don't care. I'm going to go live. I'm going to talk about it. And I think that did wonders for his business in terms of like managing such a serious hack and key and avoiding like a big reputational damage. As I sort of said on the podcast, there's just like humans are kind of processing machines. If you have an uncertain input, it's really difficult to comprehend. But if you have a certain input, it's much easier. So if you know you've lost money, you can understand that. But if you're like, I might have lost money, I don't know what's going on, it's so much harder and more confusing, more stressful. I also said the other thing was quite interesting when I asked him, like, when you set up Bybit all those years ago, did you ever imagine you could lose this amount of money and your business still be standing? And he was like, no, of course not. And it's kind of crazy. And it's kind of a testament to building such a big business. And going through something like that and coming out the other sides is pretty impressive. So yeah, it's kind of curious. Most I think most businesses getting a hack like that would have done a lot worse. They somehow like managed to, survive in a way that others haven't. So fair play.
Yeah, I think Tim, you're right in terms of like reacting to the news. I think they've done a really, really good job. I remember when we found out about the hack. Like generally, how you find out about these things is that someone flags a weird transaction, right? So you'll go on Twitter or Telegram or something, and someone sends you a message. And it's like, oh, weird outflow from Bybit. And I think Zach XBT tweeted about it as well, or maybe posted in the Telegram. And then all of a sudden, it's like, shit. Like, is this real? Is this just an internal movement or something? And I remember I reached out to Ben and he read the message and didn't respond, just asking for something. He went live like 10 minutes after. So this was, I think, like maybe 20 minutes after Zach XBT posted in his Telegram channel. And I completely agree with you. Like, you only do that if you're sure that the hack is done and that you've contained the risk, and that shows so much confidence in your business and your decision making. And not only that, but also in your confidence to actually not to kill the business that you're running, right? Like the key about a hack like this, and a lot of people don't realize this, is that exchanges like Binance, Bybit, OKX, BitGet, they make a lot of money. They make probably in the order of like $3 to $4 billion a year for Bybit, OKX, maybe even BitGet. And that means that if you have a hack of 1.3 billion or something, you're relatively confident that you can make it back in like 3 months or whatever, and just the profit that you make. Maybe slightly longer, but doesn't matter. That does not happen if your business dies at that time, right? If everyone loses confidence, everyone withdraws money, and your business just starts generating 10 times less trading fees than they normally would because people no longer trust you, you're kind of fucked, right? Like, you rely on people continuing to use your business unless you have cash reserves that are larger than the hack, which I doubt they had at the time. Like, you either reinvest it or you take out the cash, right? So I think in terms of like retaining people's confidence, I find it unbelievable that like when we started talking about this, I was like, shit, I almost forgot about this. And that's crazy, right? Like, how do you forget about the biggest hack in history? And how do people still trust it so much that they like trade on it as much as they did before? They didn't lose any market share. Like, that's insane. If someone asked me at the time, I would say, like, yeah, they're probably going to lose like 50% or more market share. Like, one instance like this and you're fucked, and somehow they're fine. Like, it's impressive.
So
Yeah.
is the moral of the story, don't listen to your lawyers and advisors?
Yes. Never, like, listening to lawyers, like, you have to be, well, I mean, sometimes you should, but most of the time, your lawyers are too conservative. And if everyone listened to lawyers, no startups would ever be successful. I would just say that.
Yeah, I'm not going to advise against listening to like legal counsel or whatever, but I do think in a space, that does value transparency, there's something to be said about being that transparent about it. And like you said, Larry, like you almost forgot about it. Like I sort of did forget that it happened this year. Like, when you edit so many stories, like in one year, everything just sort of blends together and your time frame gets messed up. But like I almost like felt like it happened last year, and I think that's just to give more credit to like how resilient they were and how they handled it, that it's like all of this story is already just like relegated to the past, to a point where like nobody thinks about it, nobody really remembers it, nobody really cares unless it just gets brought up as like, a historical point. Also, too, just a quick side note, I think that Bybit's always like been relatively resilient. Like even during the COVID crash, I remember they were quite resilient then as well, and that was obviously a major stress test for derivatives exchanges. Um, and they ultimately, to the best of my memory, didn't have any issues from that. So they've always sort of
Yeah.
proved to be pretty resilient.
And
I think
Tim,
the problem with it from a news angle is it was very few stories. Because almost immediately they confirmed exactly what happened. You almost had one story saying they'd been hacked, and then that was it pretty much. Like I think to Larry's point earlier about whether or not they had the money, I think they had to borrow a bit of money and then like paid it back or something. But there's just very few stories. Whereas when you have other things that like massively develop and there's uncertainty, you had so many more stories. I'm pretty sure like for the FTX collapse, many more stories, even aside from, obviously it was a sort of a bigger deal, but I mean more at the time, I think it was, quite a bunch of stories, which then sticks in your head for longer.
Tim, did Ben ever confirm to you like how long it actually took to make that money back? I would guess it was like 3 to 6 months, but just curious if you ever confirmed.
I didn't ask him because I'm pretty sure that's fairly public, because I thought they sort of announced, yeah, we're all good now. I'd
Yeah,
have to check.
I don't think they did, but yeah, I mean, I'm assuming they've already made it back.
Yeah, it seemed like most of the consensus on Twitter, because Ben didn't confirm directly, it was about like 4 months roughly, I guess. So moving on, I guess, to Adam, this is a good one for you, given we spent a lot of time talking to Sarah this year about policy developments. So the first one on the list was President Trump signing the Genius Act into law on July 18th. Then we had the Clarity Act expecting to go through, as well as Tornado Cash being potentially no longer under U.S. sanctions. So we have a buffet of options. Feel free to choose whatever one you want to start with.
Yeah, like I would defer to Sarah about like both the Genius Act and the Clarity Act, to be honest. As an American citizen who lives in Europe and works on the European time frame, I am a bit Sarah would definitely know much more than me and be better equipped to speak about it. But like big picture, I would say like Tornado Cash no longer under US sanctions, I think is a big win for, the cypherpunk minded out there. Anything that is supportive of open source software and privacy, I do think is a net positive for sure. It's certainly better than pro surveillance type acts. So yeah, that's pretty much my thoughts on that.
Yeah, the thing with the Tornado Cash was it was like it was like a contract address under a sanction, which I think was always the weird thing at the time, especially with like a lot of this stuff. You could spin up the same thing and just continuously change contract address or something. Yeah, I always find that a little bit peculiar, as opposed to like, stopping people from interacting with the website or, you know, targeting actual like individuals.
You know what's a really funny thing about Tornado is that when you get upset at someone, you can use Tornado to like fuck their wallet forever, because you can just like drop a tiny amount of ETH in their wallet from Tornado, and that wallet will never be able to interact with Coinbase or Binance or whatever. That's how like weird the regulation, or at least the last administration's regulation was. Is that how stupid is that, right? You have an established wallet that you've been using for 6 7 years. A random person drops a Tornado transaction there. It could be 0.001 ETH, and then you're just blacklisted. Like, that's insane. Like, luckily that's changing a little bit now with how the current administration treats crypto, but you know, just a loophole like that to fuck someone's wallet forever and like effectively make it really, really difficult, if not impossible, to cash out is crazy.
Yeah, I remember there was someone, I don't remember who specifically, but someone on CT was like shit posting, and they were basically saying they were dusting like every
Yeah.
like .eth's wallet like from Tornado.
And it was interesting as a U.S. citizen to that front. Like, thank God nobody was like poisoning my address, whatnot. But there was a real hesitancy to explore a lot of these like privacy preserving protocols. In a sense, I mean, I think once I saw Tornado Cash got lifted, oh yeah, like let me actually mess around with Railgun. Seems like an interesting product. But before that, it's like you could only really do research, whatnot. It was very, very scary to start to dabble in these solutions.
One thing I think is where we're actually starting to really hit this sort of issue of privacy, and I think that's why it's sort of come back, is you're actually starting to get real world sort of applications of crypto. Like, for instance, like crypto rewards cards. I know it's not like a super perfectly decentralized whatever, but you are seeing a hybrid where you have, for instance, a bunch of the cards, the money's held in crypto. When you make a card payment, it auto swaps your crypto into fiat and then, buys it. But like during that time, you might be earning on the underlying asset or whatever it is. And I think you're now at a point where like your crypto transactions or like all your payments are now sort of semi-public, or at least the transaction amount can now be seen, because every time it makes a blockchain transaction, every time you make a purchase. So you're already starting to hit these issues where we really do need privacy, unless we're okay with, sort of opening up everyone's bank accounts. Yeah, and I think the more you get sort of actual real world applications, I think the more people start from going from seeing it as like a thing that needs to be sanctioned to a thing that needs to be encouraged and supported.
Yeah, absolutely. I mean, I think we'll see if people really care, right? But like using crypto hypothetically, right, to like pay for everything, just to transact. I mean, you're just creating, before you created a ledger, right, that banks, the card issuers and whatnot could see, regulators could see. But now you're creating a ledger that theoretically anybody can see. There was a post going around CT the other day of like somebody was asking like how come they know how much money I have, because they didn't know that like just by transacting, like they can find your wallet, and just like if you're keeping like, 6 figures just sitting on a wallet, then like the whole world can know you have 6 figures on that wallet, right? And I think for like a lot of people that are relatively new to the space, they might not even know that yet, and they don't understand like the value of preserving your privacy in a world with digital public ledgers, right?
Yeah, I think that person sent just like some USDC from their wallet, and the guy just like checked up and was just like, "Whoa, you have so much USDC in your account." And he was just like, "Oh yeah, I didn't think about that."
Yeah.
Yeah.
Well,
Yeah, go ahead, Larry. Sorry.
one thing I was gonna say is like, crypto, at least for me, and the reason why initially I was interested in this space is like it's financial privacy and financial freedom. And so the fact that this narrative is now becoming more mainstream again is good for all of us, right? Like the reason why we're using crypto, most of us at least, is it gives us more control and ideally eventually more privacy around our financial transactions. And it's not really the case today. That being said, there's a lot of obstacles with that as well, right? Like, Zcash obviously has gone up a lot, but generally, a lot of the privacy solutions, like Tornado we just talked about, but also Monero, like they face a lot of issues when they're used for illicit activity, right? So like for now, we're kind of in this sweet spot where Zcash is probably not used a lot for illicit activities like buying drugs or whatever online, or laundering money for North Koreans. But eventually, this will become a big topic as well, right? Like with privacy, you always have the bad side as well, which is if you want full privacy, you can't stop bad people from doing bad things, just like on the internet. And that's when you really get tested, right? That's when like Tornado got into trouble, not because it existed, but because it was used by North Koreans to launder a shit ton of money for their operations. Monero got into issues and got delisted from exchanges because it is used by all the dark markets as the primary currency. Zcash is still not really used for that. So I would just stay like cautiously optimistic. Really, like when privacy wins is when regulation and legislation survives, when these things start being used illicitly. Just like cash is, right? Cash is used for illegal transactions all the time, and you're fine with it because you can't really stop it. That's hopefully how privacy will be treated in crypto as well. But it has not been so far. So far, it has been treated in a way where it gets either delisted or founders are jailed for the things they have done, and that obviously makes it more difficult for these things to actually survive and thrive.
Yeah, for a bit of a throwback, I did a feature something like probably like 5 years ago when I was writing for Decrypt, and it was about like ENS names. And I did like a lot of research, and I was just like, people like doxing themselves through their ENS names. And obviously, I think at some point you had the Nate Chastain issue where he got caught because of, it was whatever he was doing was tied to his ENS name. But I remember like there was one instance where there was a protocol where I think you sort of like buy some tokens for an event upcoming. And then if you attend the event, you get the tokens back. I think it was called like kickback events or something. It was a good idea, just I don't think like really took off. But I remember like with that, you could then know where someone was going to be a few days ahead of time purely by looking at their like public wallet. And it's like actually kind of scary, some of the potential things that could happen if we don't get privacy right. And that's why I think it is such an important thing. And I do think we're getting a lot closer to it. People need to feel comfortable that they can build privacy projects without
being jailed. Yeah, that's the main thing, is that like most of the privacy projects have become very quiet since the Tornado action, since the founders have been jailed, right? Like people are willing to risk a lot, but they're not willing to risk their freedom. And so, if people even outside of the US are getting jailed for this, then like no one's going to be building this. And not only that, but also investing in privacy projects has been quite difficult historically, because generally the reason why you invest is because you think there will be some return most of the time on a token. If you think none of the privacy tokens are ever getting listed on exchanges, which has kind of been the status quo, then you're never going to get your return, and therefore it doesn't make much sense to fund privacy projects unless you really believe it ideologically. So I think that's changing now. It's one of the best things about this admin is that I don't know who is advising Trump primarily, but it's someone that actually gets the industry, someone that really understands how things should work and which things actually matter to people in crypto and why we're actually involved in it, right? It's so easy to get carried away with like, yeah, it's 90% scams and rug pulls and pump and dumps. But the person that's advising Trump is actually someone that understands why most of us are in this industry, not for the bullshit, but for the actual things that matter.
I think the difference is that actively engaging with the industry this time, completely different approach. Like they invited a whole bunch of people over to watch. Like even if that itself was just the sort of public face of it, they are actually willing to like chat to the industry and get answers. Whereas the previous administration, as far as it could understand, it was just like they didn't want to listen to them. They wanted to completely operate in isolation and make up whatever rules and decisions without having a complete understanding of what's quite a complicated tech. And like to the point about privacy, I think one of the biggest concerns I would have if I was doing a privacy project, even if the sort of like laws were maybe a little bit clearer, my worry is the courts. Is the court going to understand how the Tornado Cash smart contracts, for instance, work in order to make like a legitimate decision about it? Because there was a whole complication with one of the trials about whether or not he was profiting from the endeavor and how it sort of worked, like in terms of the where sort of like the fees from the protocol went and things like that. And it's just like I don't know if I trust like a 80-year-old judge or something to sort of really know the ins and outs of a smart contract.
Yeah, and also, what happens again when the pendulum, if and when the pendulum swings back the other way. One thing too, I will add to this as well. I do think it's been nice to see coming out of the US, like a pretty focused anti-CBDC decision and like push. Because there was a point in time a few years ago, right, where like CBDCs, I would argue, were a legitimate threat. Like in terms of like whether we win or lose, largely depended on like a US CBDC. So it's sort of nice to see the US go more towards like a pro sort of like stablecoin approach as opposed to their own CBDC. Because I mean, there were people like as far back as like 2015 and stuff talking about like DLT and blockchain technology like really does have the potential to be like a dystopian thing, like in the wrong hands, in the hands of like the US federal government and global governments. Like it's far worse than transacting in cash, right? And I think it always bears remembering as well that like everything you do on the chain like is there forever, right? And with time it only gets easier and easier to like for a company like Chainalysis or a different company to track it, to find everything that you've done. Like if they want to, with enough time, with enough money and incentive and effort, like they can find it. Like you will get caught, right? So like even if you're the fear, right, is even if you're not doing anything wrong, but it's like, let's say, the tax authorities want to get you or somebody wants to get you, and it's just like you're doing everything on chain, like it's all there. Whereas if you were just using cash to buy your Starbucks, then no one's going to know about that.
Yeah, good point. So, pushing the conversation along, looks like for number 4 on the list, we have the push into tokenization. And Tim, it looks like specifically you had stocks pretty high up on this list. Number 1 was Robinhood making a foray into crypto in the middle of this year. I believe that was at ETCC. They had that big announcement. Uh, Coinbase followed suit in December. I mean, you had X stocks in between there as well. And then the last big one I added here was Biddle cracked almost 3 billion. I believe it was twice this year over the summer as well as in November for tokenized treasuries. So I guess, Larry, you haven't let us off. You want to start this one?
Yeah, I mean, honestly, not an expert in tokenization, but it is one of the key themes of this year, I would say, right? You have several platforms like building RWAs. You start to have platforms that are allowing even companies to go public earlier than they're actually publicly listed. And then there's obviously a bunch of firms like Coinbase and others that are now also talking about listing stocks that are already trading. So I think like it is a trend that is not going to go away. Effectively, every single large asset manager is talking about tokenizing things. I think the biggest open question for me is like, where is this going to be traded, right? Like, where is liquidity going to sort of concentrate? I think generally, like with RWAs, we see some traction already, but we don't see much trading activity yet, right? Everyone like is talking about trading tokenized coin stock, or Hyperliquid now has some stocks, and it just doesn't get much volume unless it's a weekend, or when it's not trading, or if it's incentivized, right? So in my opinion, the largest issue with tokenizing things is like, what are you actually solving? And what you should be solving is like kind of the ability to hold things wherever you want, right? Like you don't want to hold certificates, or you can kind of just hold it yourself. But also you should be solving like 24/7 trading, and you should be solving like making sure that liquidity concentrates somewhere where hopefully it creates like the fairest market possible, and it's not just constrained to like New York Stock Exchange or NASDAQ. Like those are the things that I hope get solved. But so far, we've seen a lot of announcements of like tokenizing treasuries, tokenizing stocks. We have not seen much use for these things yet, and we have not seen much traded volume yet. So that would be something I would look for in the next couple of years. Like hopefully that picks up, because that makes things a lot better for all of us.
Yeah, it's interesting. I mean, one of the things at least I've been trying to wrap my head around is how are people who don't have access to US equities or high quality like currencies going to get access? And more than likely, the same folks who are benefiting from stable coins seem to benefit from what you'll call these next generation brokerage accounts. Now, what's going to be the I guess, the straw that breaks the camel's back and has people piling into these things. I have no clue. All I know is right now on CT, everyone's talking about Rivian and how they want that to be tokenized. But no, overall, it's interesting, especially with the tokenized stocks on Hyperliquid. You kind of alluded to Ventuals as well. They're doing these pre-IPO companies that you can trade. Being interesting to see how these L1s kind of just capitalize on it and all these other projects building out, get that trading volume. But as of right now, it's a big question mark that I hope somebody solves.
Yeah, the interesting thing to me, and I think we made like a good headline about this earlier this year, was how you kind of like the two worlds are colliding in opposite directions. So you now have like crypto, but it's sort of within your traditional, brokerage accounts. It's ETFs. It's now a traditional finance version of crypto, and now we're building a crypto versions of traditional finance. And it's just strange how you're just going in these two different directions. And so far, like clearly, like bringing crypto to TradFi is working really well. The ETFs have gone absolutely ballistic. Tokenite going the other way doesn't seem to have got the same traction yet, but also a lot of people kind of like intuitively think it's the future and think it makes a lot of sense and it widens access, and maybe it has the potential over the long run to be bigger. But I do think it's the one where it has much more of a bigger open question. But it is interesting how the two are kind of colliding and combining and overlapping. And it is curious how much crypto is changing. Like this is something I've talked a bit about on the podcast. It's how like crypto, I kind of think used to be a lot more fun. Used to be a lot more, communities. Everyone felt like they could all win together. Now it feels like we're all losing together. But it's much more, PvP. It's much more like you sell your airdrop as soon as you can because it's just going to go down only because everyone else is going to sell. Like, and I think, and you've also lost it in terms of like the fun of being in a certain community. And I think the more it goes into TradFi, you kind of lose that even further because then it's like, I don't know how many cults there are about like owning one type of Bitcoin ETF over the other, but I don't think it's going to have the same as like a Milady sort of cult social, sort of group. So I do wonder how much we're going to move away from the fun side of crypto, where we had, like these NFT communities, for instance. Like I know, which sort of kind of dead now, but they kind of show what can be there with these sort of online communities built around the space. But it's definitely changing a lot, and I think it's hard to know exactly where it's going to go. Especially, if let's say the ETFs made up like most of Bitcoin trading and no one actually used the blockchain, then it kind of almost defeats itself in a way. So it's curious to hear what anyone else thinks about how these global trends are.
Yeah, it's funny too because like even just lately, like this like over the weekend, I noticed a lot of people like half joking but also quite serious about like the current state of crypto and it not being particularly fun, right? A lot of down only going on, especially with meme coin sector, are being pushed into like stocks. And there's like sort of this joke now of just like all of the crypto people are just being like pushed into stocks where it's like safe. And they're like, oh, like a bad day in stocks is it's like maybe I'm down like 1% or something like that. And it's like a bad day in crypto, it's like you're rugged. Like you're sent to zero. So I mean, like big picture, I'm sure like tokenized stocks and stuff, like it's not something I'm particularly an expert in or even necessarily that interested in. But like I assume, right, having more access to these things is just a net positive overall. Because for a long time, the stock market and these sort of things were quite gatekept. I think Robinhood, when that really took off, that sort of opened up stock trading right to like retail quite significantly. So I assume tokenized stocks can also broaden that and probably like add a level of safety to the crypto market where a lot of people have been like super degenerate and realize like how quickly you can lose everything, where it's like if you do just play the stock market, it's way less volatile, right?
Yeah, if you're on crypto, pivot to RAM or precious metals.
Yeah.
Yeah.
At what point do we think the vibes changed? Like, at what point did kind of crypto as a kind of a social, like, kind of fun, good place to be switched? What was our sort of ultimate top signal for that?
Trump meme coin.
Yeah, it was Trump. It's definitely Trump. And before that, it was like NFTs kind of going up infinitely and then just crashing to zero. That's another thing, right? Like generally, what causes things like this is when things like look really promising and then you realize like fuck, like it can actually go to zero. That's when like things really demoralize people. That's why it's a lot less fun, is because people just don't believe that these things will end up working out, and therefore they're not buying, and therefore there's just less experimentation. There's a lot, there's just a lot more skepticism from people, lot less community involvement. Perfect example of this would be Monad, right? You look at, I mean, them launching at 2.5 billion. If you asked me 2 years ago if like where Monad launches, I would probably guess 15 or 20 billion, where it would sustain for some time. It launches at 2.5, they can't even sustain that price where it raised in the sale, right? Like that is insane. I mean, they've spent like 3 or 4 years building this blockchain, constantly said about themselves that they're building the most resilient community in crypto. You know, every single effort in marketing has been spent on making sure the community is as resilient as possible. You have no one buying the token. You have people selling the airdrop. Like, what the fuck are we doing? Like, it's trading at less than $2 billion, whereas year and a half ago or 2 years ago, Starknet, which is now also at like 1 billion, it opened at 25, I believe. Like, this is how much worse this market is, just to compare, right? And then you look at Bitcoin. Bitcoin today is at the same exact price as it was a year ago. It's about 90,000. So that's how bad things are. Is that like people just can't trust that whatever they buy will actually not go down another 90%. So everyone's just scared to buy. Everyone's like quick to sell, and that's when things get like not interesting and not fun, because it just becomes like who sells faster, right? And then definitely Trump and NFTs caused that, and Trump was like the largest one. And
Yeah.
that's why, like Bitcoin is the only thing that people get excited about these days.
Yeah, it is ultimately a belief system in a way. My theory is as much as Pump.Fun was a lot of fun and was an interesting new thing, I do wonder if it kind of kickstarted this, because for me, like back in the day when you had like 4 assets on Coinbase, everything flowed through Bitcoin, like you had so much more scarcity. You had so many fewer blockchain networks, so many fewer tokens, so many fewer sort of things that people were investing in. Everyone focused on a much smaller number of things. Then when Pump.Fun came across, the sort of like the supply of tokens kind of just extrapolated to infinity, and the average value sort of went in the complete opposite direction, down to zero. And I think it also absorbed a lot of the new money coming into crypto, potentially. Probably not all of it, but a good amount of people probably went, yeah, let's try and hit a home run here, and then just getting continuously extracted by bots and just people running sort of automated strategies. And then suddenly you're in a situation where people are so used to getting rugged or everything going to zero and not seeing value in everything, and seeing all these tokens as kind of completely worthless. It's then hard to believe in any of it, really.
Yeah, you're definitely right. That's something that I do remember. But like, if you look at TikTok, like 6 or 7 months ago, and you followed crypto, like 99% of all the crypto clips would be about people just like YOLOing into these shitty small meme coins. Most people obviously lost money on that. A few made some money, but most people lost money. And that was all like new retail was effectively like gambling on this shit, right? That they would go on Moonshot, their like iOS app. You could buy $10 with Apple Pay, and then just hope that it goes up to 1,000x or whatever. That is obviously cancer to the industry. Like I think when people say Pump.Fun like actually help the ecosystem grow, whatever, I think it's complete bullshit. Like I think it actually destroyed people's willingness to invest in real projects, right? Like ultimately, I think one good thing about all these things going to shit and everything down 90% is that now people at least focus a little bit more on fundamentals and a little bit more revenue than they did before. That's like one good development of this year, is that you have something like Hyperliquid, something like a few other projects that are actually focused on revenue, and like them actually being worth more than the useless projects. That I think is a good development. But one more thing, Tim, you didn't mention, which also Pump like definitely didn't help with, is that they would take a large fee and they would not reinvest that into the ecosystem. They would generally just take that out and maybe reinvest in the platform, but those were like hundreds of millions of dollars that they just took out of the ecosystem. That's generally the money that would normally go into like altcoins, Bitcoin, Ethereum, whatever, and now it's just being taken out of the ecosystem. So yeah, like pump.fun, I think like it didn't help anything. It pumped a lot of the metrics, a lot of user numbers, and it definitely familiarized people with crypto a little bit more, those that like didn't experience it before. But it's just bad association. Most people lost money, and you're definitely right. Like it was just like eventually automated shops just extracted the fuck out of it, and then it's no longer makes any sense to even dabble.
Yeah, it became super like almost industrialized, like industrialized extraction, not explicitly from like Pump Fund themselves, but like users of Pump Fund, like people who are creating like 1,000 meme coins a day, like that literally just had like a business run out of like rugging people. And another thing with the vibe shift when it became less fun that I noticed is, I mean, there were a lot of accounts that like I followed back from like 2017, 2018, or maybe like 2021 and stuff, who like I liked their content. I sort of respected them and their takes. And a lot of them just started farming out their accounts for like meme coins and stuff. And it's to the point I'd be like, what are you guys even doing? Like, this just sucks. Like, it's not cool. Like, you're just like shilling memes. And this was going on for a really long time. And it's like, I don't know, like the vibes really, really, really fell off around that time. And then also with like InfoFi and yapping and stuff too. I mean, that certainly didn't help the quality of the crypto Twitter community, right? So
Yeah,
the memes thing was
yeah, I was just gonna say like most of the good accounts just left because like Twitter is kind of unusable if you're using it today. There's like so many bot replies. I was just talking to someone a few days ago, and they said that they make hundreds of thousands of dollars a year just responding bots to big accounts because now Twitter allows you to generate money off of engagement. So you all of a sudden like it's sort of pays off to be a bot and respond to big accounts. So every single tweet that you see is either like responded by bots or just complete garbage because the person is shilling you something. Like there's just very few high quality accounts. Most of the better ones from like 2018, 2019, 2020, all of them are gone. And I think like it's not as EV positive as it used to be to interact on Twitter as much.
yeah, I
this is
agree
kind of one of
completely.
the downsides to monetizing everything. Like it does sound cool. You're like monetizing social media, you can get paid for posting and stuff like that. And to some in certain ways it makes so much sense, but it can ruin things. Like, crypto and gaming, everyone's like yeah,
I can
everyone
probably 10x our traffic if we want to, but yeah, we don't want to.
yeah. But crypto and gaming, it sounds a lot of fun. It sounds like a really clever, because you can do automated payments with crypto. You can do micropayments and there's so much you can code, but then sometimes it can take the fun out of things. If I'm like, oh, I'm playing a game, but oh, maybe I don't want to do this because I might lose money if I, buy or sell this certain item. It can take the fun out of things. So, like, at what point do we want to monetize everything in crypto, and at what point are some things we should just, leave them alone?
Yeah, like engagement farming has always been a problem on the internet. Like clickbait has been a thing for a long time, right? But now, especially with the rise of like AI and automation, like you have incentivized slop, right? So like not just X specifically, but the internet as a whole is certainly going through a place right now where the just perpetuation and spread of like automated slop and people are getting paid for it. Because like this stuff unfortunately does get tons of engagement, tons of clicks, tons of likes. I mean, everyone knows like boomer Facebook, how many people get one shot by these AI videos and stuff. It's just all over the place. And people are getting paid a lot of money for that stuff. And it's literally adding zero value to anybody. It's like just slowly eroding away like any positive qualities of these platforms.
Yeah, just two quick things before we move on. I would say, Tim, towards the end, you started to sound like Murad a little bit, man. Hyperfinancialization, things not being fun anymore. So that was,
Well, he
yeah.
keeps tweeting about a parabola curve, like on the way. My question was which direction, like up or down?
Oh, this was a Santa
Really
Claus
clever.
rally. Just wrong direction for sure. But one of the interesting things I'd be looking forward to see about this whole altcoin industrial complex, whatever it is, would be like one, how can you deter like snipers and people bundle buying bonding curves, as well as what do you do with a lot of the, we'll say Sol in this example for Pump Fund, with all these tokens trapped in just like tokens doing no volume whatsoever, and how that could be reintroduced back into an ecosystem would be interesting. as could be a way to re-engage communities completely, but it may also rub folks the wrong way. But yeah. Moving on, for the next topic, we had digital asset treasury companies. So they reached $176 billion in market cap in July, with Strategy making up $125 billion of that. And then additionally, we saw a peak of $140 billion in crypto assets held in October. So yeah, action-packed month.
Yeah. I do think like we can probably combine this and the ETFs one. Like ETFs went from Bitcoin, Ethereum to like a bunch more altcoins, Solana, XRP, Litecoin, Dogecoin, Chainlink, with like $2 trillion in cumulative trading volume for all the crypto ETFs. Also highest 162 billion in July for the spot Bitcoin ETFs. It's kind of nuts, the two combined, so incredibly like I want to say bullish, but I mean more like, obviously they have a huge impact on the coins, right? Just, if a treasury company legitimately buys a huge amount of crypto, that's, good for those tokens. And it's curious how like amazingly good sort of these have been for these tokens, while the rest of the market has sort of been suffering. And that's why I think it's felt really weird. Like people like we're in a bear market or bull market. It's like Bitcoin's gone up with strategies just buying insane amounts of Bitcoin, but like everything else is mostly, not getting anywhere. And you've got this sort of institutional adoption on the one side versus a kind of a struggling normal kind of crypto ecosystem on the other side. It's a bit of a weird place, really. And the question is sort of what happens if the institutional side of things falls apart, if the strategy trade at some point unwinds, then we're really screwed.
Oh, that's when we really go into a bear market. Like a bad
You think
one.
this is a bear market now?
Yeah.
Wait till then.
Yeah, I mean, one thing I'll say about the digital asset treasuries is that was like a 3 month trend, right? Like if you look at like everything outside of strategy, there was a relatively short term trend of altcoin debts, right, where an altcoin would literally just be effectively by a company, get listed or be listed on Nasdaq most of the time, and then try to pull a similar trade as strategy. And that lasted for like 3 or 4 months because it was very profitable initially. It would trade at a premium. People could pre-buy the stock before it went before it actually started trading, and then they would make like 3 or 4x guaranteed. It lasted about 2-3 months. Then obviously it collapsed. Now most of the NAV is below 1, so it's no longer really profitable. And that died off very quickly. Like that to me looked like a trend that would last at least 6 months and last like 3 months. And just goes back to what we were talking about before, which is like a lot of the small term, like kind of a lot of the narratives that used to be like a year long, 2 year long are now like 3 or 4 month narratives, just because people are very quick on the trigger when it comes to like selling and when it comes to taking profit, and everyone's just very profit seeking and profit oriented, which wasn't really the case before. Like before it was more about holding, now it's about like profit taking, not getting wrecked. And then with that we've seen something similar, and now we're sort of facing an issue where like, yeah, Bitcoin has performed relatively well, but it's still, gold is at all-time high today, silver is at all-time high today, stocks are all-time high today. Bitcoin's like $30,000 off an all-time high. Hasn't performed well in Q4 at all, and largely it is because like strategy is struggling to raise more cash to buy Bitcoin. Right, it used to be so much more. That trade is not as profitable. Like they're just not able to raise as much cash, and so that is already happening. Like the trade is not unwinding, but it is definitely less effective than it used to be. And when the price is lower, it's more difficult to raise more. They just announced today that they raised a little bit extra, like I think 800 mil or something. But even then, like the impact is much smaller than it was before. And that is one of the concerns, is that the primary buyer is sort of running out of dry powder, running out of things to raise. I think they've issued like 5 vehicles at this point. It's like STRK, STRC, whatever the fuck, right? It's like 4 or 5 different ones. Then they're starting to run out of ideas to raise more cash. And that's obviously not good. That being said, I think like I don't think Bitcoin will drop a lot, but I think there'll be more buyers and different buyers. But I think strategy is in a little bit of trouble in terms of buying more and being able to secure more cash.
Yeah, I think like with the digital asset treasury conversation too, is it's like there's nobody really after institutions, right? When it comes to like who's the next wave of buyers. Like again, I've been saying this a lot during the stream, but like going back to like I don't know 2018 or something when we started like Backed was coming, and Backed was going to be that first kind of entry point for like institutions like buying our bags, essentially buying Bitcoin. And like now here we are in almost 2026 and the institutions are all here. We've got ETFs, we've got DATs. There's nothing really stopping anybody at this point, like large institutional buyers from gaining exposure, and we've seen that happen. So I think the industry is facing a point now where it's like we've had this institutional wave, and that doesn't mean that like institutions aren't going to buy anymore, of course, but like we've had this wave and there isn't really another like major like pie in the sky goal, I think, after that. Like we were always looking ahead to like when the institutions come, and we got a bit of a taste of that the previous cycle, when Saylor first started going and he was getting some institutions to buy. And now we've just had the full course. And what do we look towards next, right? From just
Oh,
like
I'm
a
wondering,
pure buyers and sellers perspective.
what if we start, if crypto finally comes up with a few sort of killer apps and actually sort of finds adoption that way? I mean, you're seeing with prediction markets in the US, I would argue that's one of them that's been incredibly successful and it's a crypto product, right? If we had a bunch more of those, you'd end up having a lot of crypto users, even not necessarily knowing they're using crypto potentially on the front end. And maybe that's where we
Isn't
find
that a
success.
problem? Yeah, like it is a crypto product only to some extent, right? Like Kalshi, for example, uses literally no crypto in the background. Like they somehow like psyop people into thinking that it's a crypto project, and they use no smart contracts in the background. There's no like token associated. Everything is a centralized platform that's KYC. Like that's clearly not a crypto project. Polymarket at least has some of it on chain, and but it is still a hybrid. Like the execution is still not happening on the blockchain. Like it's still a hybrid between centralized and decentralized. And most people, like you said, don't even know they're using crypto. And one thing that like I think is interesting about this entire thing is like Polymarket still uses Polygon, right, for people to sort of deposit crypto, but also for some of the on-chain stuff. Despite that, Polygon is literally like going to zero, just like everything else. It's associated with the biggest success story of this entire of the last 4 years, probably. And despite that, like no one fucking cares about Polygon. The narrative is like the weakest it's been in the last 5 years, and it is the core infrastructure of the largest project in crypto. Like, how is that possible? And so, is that actually good for Polygon? Even like, probably it's good enough, but like, it's doing nothing about the narrative. It's doing nothing about the chain itself. So, if people don't know they're using crypto, and if it's just like something that the project uses because it's convenient and cheap, like, does it actually matter? I think what crypto is good for, one last thing I'll add, what crypto is good for Polymarket and in general for people building companies is that it allows you to do regulatory arbitrage, right? Like the biggest use case of crypto has always been I can do things that normally would take me years and years and years of legal work, compliance and all that. I can do it within days on chain. And then when I actually run into success, which Polymarket has done, I will get banned in those countries, and then I will acquire companies to comply. Like that's generally what crypto is good for, is that you can sidestep all these legal compliance bullshit issues. And then once you get successful and you get enough cash, then you start being compliant by hiring the best lawyers and by acquiring companies that allow you to do that. Like that is why crypto is great and what it's good for. But it's not like anything else, in my opinion. Like I don't think people really care they're using crypto. It's more like they can be using these markets because crypto exists.
Yeah. Just to round all out. Oh, sorry, go ahead, Adam.
I was just gonna say, yeah, and like I agree with Larry completely, and I think with Bitcoin specifically, right? Like I do think like Bitcoin's always going to just sit there as um like a hedge against inflation, essentially, because like inflation at this point is so ingrained into like every like normal person's mind, like probably I would argue more so than ever. Like everybody feels today like everything's getting more expensive and they feel inflation. And I do think like Bitcoin has the easiest road ahead um in the entire crypto industry, because I think it will just continue to exist as a hedge against inflation. Like, Bitcoin had a bad year this year, and like Larry said, it's like the same price as it was last year. Like, if that's a bad year for Bitcoin, like that's actually quite a good year for Bitcoin when you look at Bitcoin's other bad years. We would have like we would drop like, I mean, this might lead into segue into the next one,
I
but
mean,
there were
we
previous
did
years we
hit
dropped like
all-time
30%.
highs. We did hit
Yeah.
all-time highs this year. Let's not forget that.
Yeah, but I'm talking about, dude, in like 2018, man, like that was like hardcore. And I mean, I don't want to just like front run one of our next topics coming up, but like there were days like in the past and past cycles where you'd be down like 20% on Bitcoin in like a day because some whale just decided to like sell. You know what I mean? Like those times are gone now with like the institutional buyers. Like we have found, as far as Bitcoin's concerned, at least, a significantly more sort of stable environment. I mean, you can still obviously lose money, and Bitcoin's still relatively volatile, but not like it used to be in previous cycles.
Yeah. So Adam, do you want to take us into the next topic on October 10th?
Yeah, I guess so. Yeah, so October 10th was a huge liquidation event. And like my take on this, because I was thinking about this before, is it's like kind of what I just already said. Like when I think, like, I don't think back on October 10th, even though it was quite recently, as being like, oh, that was like a bad day for the market. Even though it was, I think it almost seems worse because there's so much more liquidity and there's so much more volume. And the market's just so much bigger now that the numbers look like really bad. But from my perspective, it's like I remember from the previous cycle, like the China Bitcoin mining ban, like crash. Like I remember just watching like Bitcoin tank. I remember when Bitcoin Cash had a hard fork. I think it was like November 2018, if I'm not mistaken. And I remember like Bitcoin just falling through the floor, like down towards like 5,000, just absolutely tanking. And I remember just random off days where like Bitcoin would just like tank like 15%, So like, even though I think the scale was smaller then because the market was less mature and there were fewer market participants, even though like October 10th was bad for me personally, at least, like I don't feel like it was just like even though the numbers are sort of like record numbers, I don't really feel like it was that impactful compared to Bitcoin's history, at least.
Yeah. By the way, I got up one of our charts on annualized Bitcoin volatility. This one is more like over like 30 days, so it's not looking at like per day, but it definitely is trending downwards over time. We had a peak of 157% in 2020. Now we're sort of aroundish sort of 30 to 40%.
Yeah, it's interesting. Oh, sorry, go ahead, Larry.
I was just gonna say, like, I kind of have an opposite take than Adam does on this. I think like Bitcoin definitely is fine, and Bitcoin, like, I don't think this relates to Bitcoin that much. I think 1010 crash was important from the perspective of like it showed us how thin liquidity is on non-Bitcoin assets. And that I actually think was the worst I've seen it since I've been following since maybe 2016. I've never seen anything this bad in terms of like how exposed the markets were to how shitty the liquidity is on this. And the reason is because back then, we talked about this already, there were like 5 coins that people traded, but now there's like maybe 50 coins that people trade, and there's also perps on all of them, which was not the case before. And so now you have perps and you have a bunch of coins that seemingly have large liquidity, it seemingly have large volumes on Binance and other platforms, and some of these coins have gone down like 80 or 90% in a matter of minutes. And I think while like we've seen worse crashes in Bitcoin before, 100%, this was by far the worst in terms of altcoins, and it's something that just accelerated people's like fear that like everything they hold can go to zero effectively within minutes, right? Like in terms of certainty in your holdings, like it just exposed the psychology of the market is just much worse than it was before that crash, because now people feel like, well, maybe I buy Aave, which is like one of the more legitimate assets that I can, and it goes down 80% within like 10 minutes, and then maybe it rebounds, but like today it's lower than the price pre-crash still, and like most of the coins are. That is really bad for the market structure, and it's really bad for the psychology of people willing to hold coins and not actually doing the PvP bullshit that we're talking about and just selling immediately. So from my perspective, like while we have seen a lot worse crashes on Bitcoin, and this was not like super Bitcoin related, this was really bad from the exchange infrastructure perspective, psychology of traders, market makers. Really, I think like were not as present as they should have been. We've just seen a lot of like structurally bad things for the market without talking about Bitcoin, and I think like that's something that will kind of like linger in this market for several more months, if not longer, and something that should be addressed. Like Binance fucked this up massively. It was like probably one of the biggest failures of Binance since they started, in my opinion.
Yeah, to be honest, I've never seen Binance ever give away money. So that was definitely a first. And I think it kind of unveiled a lot of the truths you see coming from like back office technology and Web 2, which is that a lot of these larger institutions don't necessarily have the most bleeding edge infrastructure. And with that, takes a lot to refactor. So you put that off for years, you incur a lot of technical debt that unfortunately can just show its face at the worst times ever. I mean, even when I was at Fidelity during the whole meme stock craze, we were dealing with a ton of issues from these overall legacy systems. Then, additionally, to speak to Larry's point, I think it showed that there was a very, very weak structural bid for these altcoins. And previously, it was, oh, this whole industry may just be a flash in the pan. We could actually go maybe not to zero overnight, but slowly trend towards zero. Now that that's not an issue for Bitcoin, people started to realize, oh, wow, this long tail shitcoin is kind of just like another tech startup and could disappear relatively quickly. All my money's gone. So yeah, very, very revealing time.
What are people, not to give out like financial advice, but what sort of strategies should people have or could have next year? Because I think like this year it was sort of like it was almost like don't buy anything except like Bitcoin, hyperliquid, and maybe just Athena. Like if you get a few sort of big launches and you almost don't buy anything else, that was like the winning trade this year. Plus some precious metals and some RAM. What do people do next year? Like, do you sort of throw your money into absolutely every token you see? Are you like hyper selective? Do you focus on these big token launches? Do you avoid them? Like, obviously not financial advice, but yeah, maybe a little bit.
Oh, good,
And
Adam.
yeah, not financial advice. I mean, I've always forever like whenever somebody in real life asks me, I don't really talk about what I do to people, but there's people in my life who know like I work in crypto media. But like I just tell them like just like DCA Bitcoin. Like for the average person, and I'm not trying to be like a Bitcoin maxi or something. Like if you want to test the waters somewhere else, by all means, please do. But like the easiest thing any like you can do is just like DCA Bitcoin, and you're probably going to be all right. I mean, you're not going to get the returns as if you DCA'd Bitcoin like 3-4 years ago before the ETFs and stuff, but like you're also not going to get like completely wrecked because I mean Larry's right to his point. Like I think it just shows to widen the gap between now like Bitcoin and the Bitcoin maxi sort of like ideology and sort of the rest of crypto, right? Is that Bitcoin's like resilient enough now, whereas the rest of the sort of crypto industry infrastructure and whatnot really still isn't very resilient.
Yeah, I actually agree with Adam. Like, if someone asks me what they should do with their money, it should just DCA Bitcoin if you believe in crypto long term. The thing is about like all these other assets, like even the more legitimate ones, like Hyperliquid, like Aave, like whatever else that actually holds value, like you should still be managing it pretty closely, right? Like even with Hyperliquid, which was probably the most hype trade possible, it's down like what 70% since the peak, 60%. Is that something that you really want to expose your friends to? Like, probably not, because most people are used to the 5 to 10% swings from stocks or from whatever other portfolios they have. You give them one advice, they don't follow it closely, they lose 60% of their money, and they will never dabble again. Um, the way to get involved in crypto is just start with Bitcoin, buy like once a week, once a month, or whatever, buy consistently, and then start getting more active, understand things more, and only when you're actually in the industry or when you follow it closely and you tend to understand what are actually the risks, then you can maybe start dabbling with like Ethereum, Solana, and some of the like longer tail assets. But until then, it's just stupid, and like ultimately everyone will lose.
Yeah.
What do we
So,
think about? Sorry, Kelvin.
no,
What do
good.
we think about the token revenue sharing? Because we're starting to see that getting implemented. We've seen that a few projects have gone live with it. That means now it's kind of you hold the token. Obviously, you're still exposed to the underlying, but you can get a potential revenue share if the protocol does well. So you can start investing a bit more based on fundamentals as opposed to just purely meme coinomics or whatever. Do we think that has a measurable impact, and that that's something to seriously worth consider, or is it a bit like staking where it's like you can be, you might gain 2%, but you might drop 40% at the same time?
Yeah, so in my opinion, this does have measurable impact, and it's probably one of the most positive developments of this cycle, and I hope it lasts for the next 4 or 5 years minimum. Largely because it's not like staking, right? Like staking is sort of like just the financial engineering stuff, right? Like you have some inflation, that inflation gets redistributed. With revenues, it doesn't work that way, right? Like you rely on protocols to actually be profitable, and that those profits then get either distributed to token holders or bought back in the token itself. Like that is the opposite of financial engineering, right? You're creating a project that is financially viable, and financially viable projects should be worth more money than those that are not. The problem, as is always with crypto, is that sometimes what projects will do is they will incentivize things, and only with incentives they will become profitable on paper. And it's sometimes difficult to determine, like, is this actual profit, or is this just because they're giving away so many tokens that it's more like exchange these tokens for revenue, and therefore it actually is not that meaningful. So really the biggest problem that we have right now is that there's no like standardized way to track how much each project is making in revenue and how much it's actually spending to get that revenue. But the long-term game in crypto is that we have permissionless protocols that are self-sufficiently generating enough revenue so that the project itself and the token itself can be bought back from those revenues. Like that is a narrative that has to survive for crypto to make sense long-term. But there's also the flip side of this, which is like Hasu, for example, who works for Lido. He believes that this should not happen until the project is established enough. So he believes that revenue should not be used to buy back tokens because the protocol still needs to be in a growth mode, and therefore should be reinvested into the growth of the protocol itself. And only after the project is like in the absolute possible shape should it start using revenues for buying back tokens. So there's always like two sides of the argument, but I would say this is by far the best development that has happened recently. But we also need like better data, better tracking, better reports to cover all this. And eventually, really, like we should only be interested in projects where we think there's a meaningful path to profitability of the protocol itself. Eventually that will lead to token buybacks, and eventually it'll lead for you to actually make money. Like right now it's the opposite, unfortunately. And even projects that do buy a lot of a lot of their tokens, like Hyperliquid, like they can still go down 70% because there's still so much speculation. But eventually this is the long game, and this is like what makes me interested in crypto.
Yeah, I would argue the measurable impact likely is going to be on the projects that get killed because they're not able to balance meaningfully between buybacks as well as reinvesting in R&D. And that's the quiet part that isn't really discussed as much, just because token holders want rights, and this is the most immediate way to get token holders rights. So I'd argue that as a project, yes, you need to listen to your community, listen to your token holders, but at the same time, users are never going to hand you what to build on a silver platter. That takes time, potentially user interviews, and a lot of other different kinds of explorations and market research to figure out. So clearly the market enjoys it. Look at the likes of Pump Fund and Hyperliquid. They had some of the largest mind share this entire cycle. But with that, I don't think it's a silver bullet. Teams still have to find ways to innovate, and it's only going to get more competitive by the day. All right. So I guess we got to move into the lightning round because we're a little over an hour already. But the next one, maybe some quick takes on big ICOs and big ICO token sales as well as mainnet launches. So we had Monad, who raised 269 million before launching. Fogo actually canceled its token sale. Plasma raised 373 million before launching. Coinbase acquired Echo and Sonar as well as Up Only. And then pre-market token trading on Hyperliquid were the big ones in this category. So anyone want to start?
Just to be clear, they got the Up Only NFT. They didn't like buy the
true.
podcast outright.
Well, probably the same thing, right? Like the thing about the NFT was that they had to make an episode, I think, within 1 month, and it's been like 3 months. So I don't know, I don't know what's going on.
I mean,
there.
We got rugged.
it's not the market to do it. It's just like, what are you celebrating in this market? What's going on, right? Like you're down only, maybe.
Yeah. My quick take on this specific topic is that like it was going really well. I think first off, I think token sales are good inherently for crypto. I think it's much better than just like doing huge airdrops for free, which leads to like really shitty gameable activity. I think token sales by design are good. Just like ICOs were pretty good until they started to be game. So now we have these like KYC sales, which I actually think are good. Like they give people the opportunity to participate in projects they're bullish on. Unfortunately, this market is not the best for something like this to do well. We saw with, you guys didn't mention Mega ETH. Like Mega ETH was probably one of the most oversubscribed sales in history, and that happened only like 2 or 3 weeks before Monad sale. Monad did the sale, barely fully subscribed, and then within like a week, within days, it started trading below the sale price. That's what actually really fucked this narrative. Like I thought it would last for, again, much longer, and it ended up being like a few months only, because it's harder to participate in things when all of a sudden it's like, yeah, it's not a free 2-3x. It's actually, I can lose money within like 24 hours. Fuck, like maybe I shouldn't be participating. That's the problem. That's why you see Fogos canceling the sale. That's why there were like 3 or 4 Sonar sales planned for December, January, February. All of them either canceled or are delaying. Some of it is not public. It's because there's just not enough demand, and you see altcoins going to shit, and it's no longer free money, right? Like good thing about ICOs is that it gives you full unlock, and if you don't believe in the project, you just want to flip it, you can flip it. That's what generally creates like a fair price, right? So that you can then actually have a project that doesn't open at 20 billion, like Starknet is down only, but can actually open at a reasonable valuation, like Monad, like 2. Then you need some buy pressure, and the buy pressure is not here. So my quick take on this is that it's a good development that we now have the administration that at least allows these things to happen. It's a fair system than stupid airdrops, which get like airdrop hunted by Russian farms somewhere in Moscow. But yeah, it's not looking good because it's not sustainable at the moment when no one's actually buying the tokens once they list. But I do like this development.
Understood. My career in e-begging is slowly being ruined, though, Larry. Can't have you funding these airdrops too much. But Adam, Tim, any quick takes on your guys' end?
Yeah, I mean, I noticed like the Octra ICO on Sonar has also been delayed. I just checked and it hasn't been an update on that either. Yeah, I just agree with everything Larry said. I do agree with everything Larry said. It's just interesting to see, like, because I remember like the ICO bubble when that burst and like the bear market 2018 and all that stuff. And it's interesting to see it come back full circle, and everyone sort of realized like that really was essentially the most fair way to do like token sales and fundraising. We've tried various other things since then, and we've come back around to ICOs essentially.
Yeah, I think my issue is more with the size of these sort of chains coming to market. So you're sort of launching like a $2.5 billion valuation. The amount of money it requires to sort of keep that there is a lot of money. Like it's quite hard to quantify, but you need a lot of buyers buying these tokens to keep that sort of valuation. And so each time you launch another token that's worth a few billion, you need a lot more money to sustain that. And I think that's kind of one of the issues when you've got kind of liquidity crisis in crypto. And if you could argue, or at least a lot of people think, there hasn't been a huge influx of new users into crypto this cycle, or at least in the way we've seen before. And I think when you are sort of shuffling around house money, the more sort of products you have that the money is kind of getting spread across, like it brings everything down, So you've got, obviously with the pump.fun coins, you've got like 1 billion tiny market cap coins that have sucked out like lots of little bits of liquidity. Then you've got these big new token launches that have sucked out big bits of liquidity, and there's just less money essentially for kind of everything else. And I think that's another reason why just everything hasn't had the same boom cycle that we've seen previously when you've had sort of like less competition. And I think what I found weird about like the Monad sale is how it sort of launched at such a high valuation. Like it's sort of assuming all the promises that it's going to deliver on and it's launched at that value, but it hasn't necessarily delivered. It still needs to establish a big community. It still needs to sort of support all these projects for it to be worth that much ultimately. So for them to sort of do a token sale, assuming all of that, assuming it's going to be that big, that is what sort of creates the risks. But also then requires more money ultimately to keep that afloat. So I do think, yeah, this is
I mean,
double
like one quick thought to that is that it definitely like raised at a high valuation, but it also is the same valuation they raised from Paradigm like a year and a half ago. They were boxed in, right? Keep in mind, this is a project that's been raising and alive for like 4 years or so. One of the most hype projects possible. It raised a KOL round like 2.5, 3 years ago at 600 million, and after that, it raised from Paradigm at the same valuation as the sale itself. Like, what are you going to do? Like, go tell Paradigm that you're like raising it like 50% discount a year after they invested? Like, obviously, you can't do that. And also, like, there were people that thought this would go immediately to like 20 plus. Like, there were people who were comparing Monad with Solana in terms of performance and ability to go higher, right? So, like, it's easy to say in retrospect, but looking back, if you're them and if you think that you have like the strongest community in crypto, you have Paradigm like, you know, like dying to give you money at the valuation that you're raising from people. Like, obviously they're not going to go lower, but the market is just so shit that like none of that obviously matters. Community is a lot weaker than they thought. Market is a lot weaker than they thought, and no one wants to buy the token, and there's very little activity on Monad. So that's just the state of the market. But like, you know, to criticize them for raising at this valuation, I think doesn't make much sense because they were sort of boxed in and could have been a lot higher, honestly. Like they just couldn't have done it lower.
Yeah, so
How
I
long
guess
will it be before we can get more people into crypto? Because it kind of seems like we've fatigued everyone that's in crypto right now. And I'd also say that it's gone quite mainstream in terms of the awareness of it. Maybe not the understanding of it, but you know, crypto's it was like Squid Game. Like I see it everywhere. So everyone's sort of aware of it. But maybe like have we reached a limit of the amount of people that are genuinely interested to like get into crypto? Or can the space get bigger and therefore accommodate more growth?
I think it's, you know, it's like a cyclical thing. Like my take on Monad is like, what are you gonna do on it? Like we've got a million L1s. Like, where are you gonna go like meme coin trade on Monad? You're gonna go farm some DeFi. Like, what are you gonna do? Because I feel like everything is so saturated. Like liquidity's dried up. Like it's like everything we've sort of talked about in this live stream so far, right? All kind of applies. Like we are in this like bearish, depressed period of the market, which is not ideal to like launch in, right? So it's like Monad comes and it's like they go live, right? But it's like, I haven't
Who
seen
cares?
any talk about doing anything on Monad, like
Yeah.
nothing. And it
And,
used to
and
be,
what,
sorry, it just used to be, there used to be like a cycle of like, okay, like now we're farming this chain, now we're gonna go farm this chain, now we're gonna go farm this chain. But like no one's really farming even anymore because there's nothing to do.
Yeah, that's one thing I was gonna say. I have a bunch of friends from like 2019 or whatever when it was like a farmers group. So we have this farmers chat, and I was talking to them recently, and some people said they have most of their money parked in treasuries because farming makes less money in treasuries these days. Like that's fucking insane. And those are people who have done this as a profession for 2 or 3 years. They have made a lot of money, like more than 100% yearly return in some years, off like very safe investments or farming, whatever. And now they're holding their things in like treasuries, not even tokenized treasuries, literal treasuries. That's crazy. And I think Adam's completely right. There's just not many things to do. Like we have so many new L1s, so many new L2s, and there's just really not many new original projects, no new retail people, and you have a lot of free block space, right? Like for the first time in history, we have significantly more block space than we have actual demand to use these blockchains. And because of that, it's just hard for these chains to establish themselves to make revenue. And it's going to be an uphill battle. Like it's tough, right? Like you're looking at someone like Polymarket, eventually they'll probably want to migrate from Polygon. How do you even pick the chain? Like ultimately, I think it's just really difficult. Like you probably go for the most established, the easiest one to use. You don't go for the new ones because it's just too much of a risk, right? Like how do you know that Monad even survives the next like 10 years? You would probably rather go to someone like Solana, where like at least you have to build out infrastructure and build out tools to enable onboarding of users. So it's just a really tough market, and we have like too many L1s, L2s. Used to be free money to invest in them, and now like some of them are like you can invest early and still lose money on these L1s because there's just no demand to buy them.
Yeah.
Yeah,
So
I mean,
Tim, I was
usually
gonna
it's
say, okay.
usually it's how much the BD people will pay you from the L1 project is sort of what decides the decision where to go.
But
And
most
so
of the
it's
time,
still,
that's in tokens too, Tim. And like those tokens, if they're not valuable, it just goes down and down and down, right? Like these chains don't pay you in cash; like they pay you in token incentives, and that's why you see those chains just going down and down because they don't have any cash. They have to give out tokens, and people just insta dump these tokens.
yeah. And sorry to steal Kelvin Thunder, but I just really want to ask this question based on sort of kind of Adam's comment about how kind of depressing the space is. Is there anything to be optimistic about 2026?
Oh yeah, absolutely. I don't think, but I guess the days of it seems like retail getting rich and the Lambo coins kind of came and went. It was a moment in time. It was beautiful. I loved it. I'm glad I got to experience it. But now it seems like it's going to come from the 10x improvement in the technology itself. So we talk about improved user experience. We're not dealing with these horrible front ends that these crypto projects used to run on and whatnot. So if you're saying I'm in a third world country, I can't get access to US equities, my currency's getting inflated to hell. Yeah, I can immediately jump on. I can start accepting stable coins. They're more or less like ubiquitous overall. So I think that's the main thing to be excited about, as well as all these different structured products that you can passively buy. So that's my 2 cents, just initial reaction.
Is the tech improvements really gonna do it though? Like, I mean, you know,
Yeah,
Monad
I don't
theoretically
actually agree.
is
Yeah.
more improved than previous versions. You also had like, you know, Aptos Sui that technologically might have been superior to other chains, but ultimately it was Solana that was the high performance chain that won out, which my argument is it was kind of the community that decided the success of that chain more than the actual technology, even though the technology was an improvement at the time.
You still see
So
that
yeah,
pockets of irrationality where people are doing things that are completely antithetical to what incentives would suggest. They're just not popular. Like there's still meme coins. There are people who are, oh boys, Asia's waking up and the meme coins at like 500K market cap. So these pockets do exist, but uh, are they not as prevalent? Yeah, absolutely. Why? There's a multitude of reasons, but I feel like we kind of touched on those earlier on in the episode.
Yeah, my quick take on this is that it's not going to be the technology improvements that actually are what like enables more. I think it has to be user applications. It needs to be things like Polymarket, like Hyperliquid, like things that are just not possible without crypto. And we need to have like the experience needs to be good enough so that people outside of crypto want to use these things. So I think that's what unlocks the next thing. Like we have to have an app explosion. Like we have to be focused on how do we get normal people outside of this industry interested in trading in like using these things. Unfortunately, so far, like the biggest use cases we've got is just trading and speculating, and I don't know if that will change. But what we need is like huge focus on apps, funding of apps, which hasn't really happened much. Um, and then I think like we stand a chance on the morale being improved. But I think like L1's getting 10x better or whatever infrastructure, like it helps for onboarding reasons and all that, but it's not what's stopping us right now. Like what's stopping us is that there's not a single app that like we can tell people to go use right now, and they're going to be better off because they're not using a TradFi company.
Understood. Understood. So the next topic we have is Aave drama. So governance problems between DAO and Aave Labs, as well as it begs the question: what are token holders actually entitled to? So, Larry, do you want to start this one?
Yeah, I can quickly start it. This is very recent, so this is happening over the last couple of weeks. Um, for those that don't know, like Aave is probably the most legitimate DAO that exists today, right? There's a lot of jokes about DAOs are just useless. They're like, it's just a theater and all that. And I agree in most cases. I think Aave historically has been a good example that I would point to if someone says, yeah, DAOs are all bullshit. Like Aave DAO has performed quite well. It's existed for 4 or 5 years. it runs quite well, has external contributors, and Aave has performed really well. Not the token itself, token has done quite well as well, but mostly the product. And so now, over the last couple of weeks, there's this tension between what's Aave Labs, which is the company that developed Aave protocol itself, kind of the core contributor, but they have been less active over the last 3 or 4 years. They worked a lot on the Lens protocol, which was a social media site, but they've still been active, but just a lot less. And then you have these external contributors, which generally are ex-Aave employees that started new companies to do things. You have ACI, which is led by Mark Zeller, and then you have BCG Labs, which is led by the previous CTO of Aave. And they recently started going at it. So Aave Labs versus the two external contributors. Basically, the external contributors believe that all IP and brand assets should belong to the DAO, whereas Aave Labs believes that the assets should be owned by themselves and they're free to monetize them. So there's friction between those two camps right now. There's a snapshot vote that one side actually claims is not legitimate because it was posted too early. And there's just a lot of back and forth, but ultimately the argument is like, who should own the brand assets, and should Aave Labs, not ultimately the owner, should they be able to monetize the front end and keep the fees as a company versus actually funneling them to token holders? So there's a lot of tension and a lot of drama, and I think this is going to be something that gets decided over the next 2-3 weeks. We've seen the Aave token price not do well based on this, right? There's just a lot of negative tension. We saw one whale dump a lot of money and sell all their Aave stack. Ultimately, it goes back to like, does DAO have enough power to fight back against Aave Labs claiming to own these assets? Well, they do own them, but like ultimately it's more a question of like, should they own them indefinitely, or should DAO eventually be able to own them? One example we could make, and it's not a perfect example, but is Uniswap, which historically has been able to monetize the front end, and recently they started moving against from this model when the front end fees would also be diverted towards unit token holders. So that's roughly the drama. I mean, we could go a lot more in depth, but it is one of the more fascinating things to follow if you care about DAOs, if you care about crypto in general, because it's all about like power struggle between companies and DAOs. Stani, who's the founder of Aave and founder of Aave Labs, he bought $10 million of Aave tokens, probably to be able to participate in this vote in a very meaningful way. So it's like Game of Thrones of DeFi.
I definitely say it's interesting. I'm curious what conversations the board for Aave Labs is having, in that it seems like they're supposed to be a proxy between, or my understanding of DAOs at least, is they're supposed to be a proxy between the labs entity as well as token holders. So ultimately, I'd say they're, at least the board will have a big say in how this ends up working out. But I'm starting to think, at least given the tension on Twitter, I haven't checked out like Tally or Snapshot or anything like that to see where the votes are, but it seems like it's building up towards some kind of legal action. So I wonder.
Yeah, the vote hasn't started yet. It starts tomorrow. It's 24 hours after they post the snapshot, so it's in like 16 hours or something. And my take on this is that like the point of DAOs, right, is that eventually you actually move away from all companies that have any power over the protocol itself, and you only hire them to do certain things for you, right? So like some companies could be done for managing governance processes, some companies could be done for developing the protocol, but it should be external participants, whereas token holders should be the ones that ultimately get all the value of the protocol itself, right? Like in the perfect world, we have governance tokens. They should go up in value if the protocol is successful. But if you divert fees to private companies and you divert IP and brand and all that to private companies, it's going to be less effective, and you sort of like lose a little bit of the juice on the way. So that's kind of the core problem right now. But yeah, there's going to be probably some legal involved, but ultimately just shows like how brittle these things are. If the most like functioning DAO can have these issues, and they're so publicly streamable, right? Like in private companies, when you have these huge disagreements, you figure it out like behind closed doors. Someone probably gets fired afterwards and it's done, right? This is all happening on Twitter. It's happening in Lobster Chat. It's happening in like these governance forums and all that. It's so fucking public, and that's not good because people see how brittle these things are. Like if if Stani's, ends up losing this vote, who knows like what will happen? Maybe he starts a different company. If Mark loses this vote, maybe he's going to be a lot less involved in the future of Aave, and maybe people want him involved. Like it's bad because it gives you insight into like how these things work and how unstable they are, and that's the best DAO that currently exists. So how are all the other DAOs working? Like probably not the best.
No, well said. Well said. Tim, Adam, any comments there from you guys' end? Nope. All right. Well, let's move on. In that case, we have last on the top 10, and then some honorable mentions we probably won't get into given we're over time. But Bitcoin, the quantum threat. So why is this a topic now? It seems like every few years this theme reemerges over and over again. And then the hot topics, what are things that we can do to prevent this? So I guess one of the guys I follow on the timeline, Willy Woo, it's interesting. I believe he says that certain address types aren't actually quantum vulnerable. I know one of the ones he says Taproot is actually not quantum resistant. But again, I tend to say, let's wait to see till something real emerges to decide, okay, is this actually a threat or not? But I can't calculate what the size of this threat actually is right now. So I defer to the gigabrains and take a wait and see approach.
Okay, my quick take on this is that I completely disagree, Kelvin, with what you just said. I think quantum is a big, big, big problem for Bitcoin, in my opinion, largely because one of the superpowers of Bitcoin is that it actually doesn't change. It stays the same, right? And that's a quality that a lot of people like. People like the fact that like we know how many coins there will be at a certain time. People like the fact that it's really fucking hard to get anything done in Bitcoin. Like getting Taproot took like 4 or 5 years. SegWit and all that took like 4 years. The thing about Bitcoin is that it doesn't change, and it gives you some sense of like safety and predictability. Problem with quantum is that, yeah, some addresses are fine, but fine doesn't mean they're completely fine. What actually happens in Bitcoin is that eventually it will need to be migrated to a quantum resistant cryptography. And that process is relatively difficult to do, and some addresses work better than others. And the biggest problem with Bitcoin is that there is about like 20 or so percent of Bitcoin that is publicly exposed, that is probably lost or Satoshis. And those Bitcoin are going to be probably impossible to migrate in time unless you do a hard fork and remove those from circulation. So really the core issue here is that, one, Bitcoin moves very, very slow, and it's hard to get Bitcoin developers to do anything because they will dismiss things even when they're legitimate. They will just move slowly and slowly and slowly, and that's a big problem for quantum. Second thing is the coins that are going to be impossible to migrate. Those are, most of it is Satoshi coins. You're probably never going to get support in the Bitcoin community to fork them off, to like say they're not legitimate anymore, because that just goes against everything that Bitcoin stands for, right? Which is like freedom of ownership, permissionless, and all that. So the problem is that if quantum happens, and even if Bitcoin migrates in time to quantum-resistant cryptography, those coins are still going to be possible to actually steal or take if you have a quantum computer. So it is a big problem that needs to, like, hopefully as soon as possible start getting mind share on it in terms of developing a solution that works. And there's going to be a huge discussion on this in the next couple of years of like, how do you deal with the unsolvable, which is what do you do with those coins? Because if someone gets access to 20% of Bitcoin, you're kind of in trouble. Like price can go down 100%, right? If someone like starts selling those. Exchanges would probably blacklist and all that. There's a bunch of like sensible solutions, but the smartest people that I know are taking this very seriously and are pushing Bitcoin developers to take this very seriously, because this is not one of those things where you can just wait and see what happens. This is one of those things where you have to be ready. And the problem with quantum in general is that you don't know if it happens in 2 years, if it happens in 10 years. No one fucking knows. And like the most common estimate by people who are, quantum experts, they say it will be about 10 years. But there are also smart people who have recently started saying, actually, people are wrong. This could be within 3 or 4 years. And if it happens this quickly, like Bitcoin is in a really bad spot because it's just not ready. You look at like something like Solana, Ethereum, and other chains, or even like something like Starknet, which is already quantum resistant. they're just gonna have a much better time doing this because they're already working on the solutions for months and years, and it's going to be much easier for them to migrate because hard forks are normal on these chains. Like, these changes are not that difficult to do, whereas on Bitcoin it's effectively impossible. So without like trying to sound like a doomer, I think this is fine. Like, it will be solved, but it is very important that there's pressure on Bitcoin developers and Bitcoin community members so that they take this seriously, because if they don't, this will lead to a fucking shit show and it will not end well. Like, it will be so chaotic if Bitcoin is not ready when this happens. That is actually an existential problem if it's not ready. If it is ready, it's fine, but like, people need to start preparing.
Yeah, one issue is like it's not definitive which coin Satoshi owns. Like, people have estimates, they think it's pretty clear, but you could have it wrong. And we've seen a lot of cases where dormant Bitcoin for a decade has woken up and moved and gone to an exchange. And you don't want to unfairly, someone who could just be sitting there holding it for a long time, you don't want to sort of say, nope, we thought you were Satoshi. You just lost access to millions of dollars worth of Bitcoin. Now, the tweet I saw yesterday about this by Jameson Lopp, he said that he's been publicly discussing the risk of quantum computing in Bitcoin for 18 months. His main takeaway is that he hopes quantum computing progress stalls and fades away because adapting Bitcoin to a post-quantum paradigm will be downright nasty for many reasons.
Yep.
He said making thoughtful changes to the protocol could easily take 5 to 10 years. So he's sort of slightly optimistic it won't break Bitcoin in the near future, but I think he's very pessimistic about changing the protocol with, as Larry said, because of the social element of it, and the sort of technical questions. Yeah, it seems like definitely a problem. My thing is, and I'm definitely not experienced it, but I'm like, why do we not have some like sort of quantum resistant Bitcoin test nets existing in parallel right now? Because sort of the more you can experiment with them, understand them, test them, at least you're ready, right? If it suddenly happens faster than you expect.
Yeah, it's a really, really big issue that people are not taking seriously. One person, if you care about this topic, is Nick Carter. Like, he's really passionate about this topic, and he's been tweeting about it nonstop for the last 3 months. I think his takes are slightly more on the extreme side. Because he thinks it's like inevitable that this happens quickly. He thinks a lot of things are like slightly on the more alarmist side, but he's directionally right. And it's like, if you want to follow this topic closely, he's been really good at following it. One more thing I will add is that, when you think of like quantum computing and happening in the future, like, what you really want is either the US government or a US company to be the one that actually breaks this. Because if some other country like Russia or China or some non-US company gets access to a quantum computer the first, like, that's when it becomes a much larger problem, in my opinion, because it's just much more unpredictable. But ultimately, like, it seems to be inevitable, and it seems to be something that like we all need to take more seriously. I think like dismissing it, well, like Adam Back is dismissing it pretty bad, and he's like one of the more visible people in the Bitcoin industry. Like, that doesn't help anything. Like, in fact, this is probably the biggest existential threat to Bitcoin.
Yeah, I mean, just optically on top of that, I mean, a successful or successfully defended, let's say, attack, whatever, like, if something bad happens on the quantum front, it's just going to be really, really, really difficult for like Bitcoin's number to go up again for a while after that, like almost like best case scenario, because it's buyers and sellers, right? And like demand on the buy side, I would imagine will pretty much disappear from like the institutional side and the retail side for that matter.
Yeah, definitely gonna be interesting to see if the quantum threat is enough to unite Bitcoiners, given how ubiquitous it is and how diverse the community is. I mean, I haven't seen anything that Bitcoiners agree on at scale in a very, very long time, probably since like the block size wars, and even then, that almost destroyed the network. But we did have a few honorable mention. I'll probably just read through the top 5 that we had on that list, and from there we can wrap it up. But Other topics that were very, very important were Bitcoin all-time highs in July. On the stablecoin front, Tether around the 17th largest holder of U.S. Treasuries globally, this outpacing the EU and South Korea. We had corpo chains like Tempo, as well as we touched on Pump Fund, but precious metals outperforming crypto this year, as well as Do Kwon getting sentenced to 15 years. So last thing, that was just the other five on the list. We could go round robin real quick. Any three headlines that come to mind, guys, that we didn't talk about today?
I think we covered the most important things. It was productive. I mean, it took a long ass time, but it's good.
We made it.
Yeah, I will say too, like with Tether, and the treasuries and stuff, like we've come a long way from Tether Fund, from like Tether being like a fairly legitimate concern to a large sector of people as being like what sends like crypto to zero, to like who worries about Tether now,
When we
literally.
covered it, we were covering it heavily like so many years ago, and I remember wondering, I was like, is Tether going to be the only company that sort of survives out of everything? And it's kind of like, they just sort of grew and became a behemoth.
Yeah, I remember Tether Fund days. Good times, good times. We've come a long way. But that being said, that is all the time we have for today. I want to thank Adam and Larry for joining us for this episode. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thank you. See you next time.